JEPQ, the income machine you've been waiting for. Booyah! Welcome, welcome, welcome! It's your pal Kramer here, ready to make some noise about your money. Today we're not just talking, we're diving deep into a stock that's got Wall Street buzzing. JEPQ. That's JP Morgan Nasdaq Equity Premium Income ETF. Say that 5 times fast. But is it a mouthful of money for you? That's the real question, isn't it? We're gonna crack it open. No fancy degrees needed here, folks. Just me, your guide to the green. This isn't just another ticker symbol. This one's got some secret sauce. So, what's the big hoopla about JEPQ? Think Nasdaq 100, those tech giants, Apple, Microsoft, Google. But JEPQ isn't just about owning them, it's about getting paid while you do. We're talking about that sweet, sweet income, people. JEPQ aims to deliver monthly cash. Yes, monthly, right into your pocket, while still giving you a taste of that Nasdaq growth. It's like having your Wall Street cake, and eating it too, with extra frosting. But is this cake a dream or a scheme? We're gonna find out. This ain't your grandma's sleepy dividend play. No way, Jose. JEPQ is playing in the big leagues. It uses a smarty pants option strategy, covered calls to be exact, on the Nasdaq 100 index. This is how it squeezes out that income. It sounds complicated, I know. But don't you worry your little investing heads. Think of it like this. You're renting out a tiny bit of your stock's future profits for cold, hard cash every single month. That's the JEPQ game plan. Simple, right? Now why are we dissecting JEPQ today? May 19th, 2025? Because this market is a wild ride. You need smart plays, you need income streams, you need a shot at growth. JEPQ tries to be that triple threat. It's a contender, a real contender. But every stock, every ETF has its soft spots and its knockout punches. We're gonna put JEPQ through the Kramer gauntlet. Get ready to learn. Get ready to potentially earn, because knowledge is power, and power, my friends, is profit. Ski-daddle. Under the hood, JEPQ's performance and what makes it tick. All right, let's get down to brass tacks. Numbers, performance. That's what separates the champs from the chumps. JEPQ, like a lot of tech-heavy investments, has seen its ups and downs. It's a roller coaster, baby. But its income generation, that's been a more consistent story. You gotta look at the whole picture. Total return. That's price gains plus those beautiful dividends. Don't just glance at a chart and walk away. Dig deeper. That yield is a big, big part of JEPQ's allure, often hitting those juicy double-digit numbers. Booyah! Key stats? You want them, I got them. First up, the expense ratio. That's what they charge you to own it. JEPQ's is pretty competitive. You gotta watch those fees like a hawk. They can nibble away at your hard-earned returns. The dividend yield, like I said, is the main event. But listen close. It can change. It depends on market volatility and the money they make from those options. So understand this, it's not a guaranteed paycheck like a bond, it's dynamic. Manage your expectations, folks, but the potential is definitely there. So, what makes JEPQ's price boogie up or slide down? Pay attention. The biggest factor is the Nasdaq 100 itself. If big tech is on a tear, JEPQ will catch some of that tailwind. But here's the catch. It won't capture all the upside. Why not? Because of those covered calls we talked about, they put a bit of a ceiling on potential gains. That's the trade-off for getting that higher income. So, if the Nasdaq rockets to Mars, JEPQ might lag a bit in price. But you're still collecting that income. It's a balancing act. What else moves the needle? Volatility. When the market gets choppy, it can actually be good for JEPQ's income. Higher volatility can mean bigger premiums from selling those call options. That can boost the payout. Interest rates also play their part. When rates are up, income strategies like JEPQ can look mighty fine. But higher rates can also weigh on tech stocks. It's a complex web, my friends. But that's why you've got me, to help you untangle it. Don't be scared. Be prepared. JEPQ versus the street, how it stacks up, and market mojo. Now hold your horses. JEPQ isn't the only sheriff in Income Town. Oh no, there are other covered call ETFs strutting their stuff. You've probably heard of QYLD, that's another big one. It also dances with the Nasdaq 100, and uses a similar covered call playbook. So, how do they stack up JEPQ versus QYLD? JEPQ is run by the folks at JP Morgan. They have a slightly different flavor. They often use options that are a bit further out of the money. This can let JEPQ capture a little more of the upside. Compared to QYLD, it's a subtle difference, but it matters. Let's compare JEPQ to just plain old QQQ. That's the ETF that tracks the Nasdaq 100. QQQ is all about growth, 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 pure unadulterated tech power. JEPQ, on the other hand, is about income with that tech exposure. So in a screaming bull market, QQQ will likely leave JEPQ in the dust on price. But JEPQ will be steadily churning out that monthly income. It all comes down to your goals, investor. Are you hunting for massive growth, or do you need that steady cash flow? JEPQ tries to give you a taste of both worlds. What market trends are blowing JEPQ's sales? Tech. Is big tech still the place to be in 2025? I say yes. But you gotta be smart about it. Volatility, as we've said, can be JEPQ's best friend for income. A market that's going sideways or gently up. That's JEPQ's happy place. It can generate that income while the underlying stocks just tread water. That's where it can really shine. But watch out. A sharp market dive will hit JEPQ too. It's not immune to gravity, folks. Another big trend, the relentless search for yield. With interest rates doing the cha-cha, investors are hungry. They're starving for decent income. And products like JEPQ are designed to feed that hunger, but remember the golden rule. Higher yield often means different kinds of risk. The risk of missing out on some big gains. The risk of your capital going down if the NASDAQ takes a nosedive. There's no such thing as a free lunch on Wall Street, but JEPQ can be a very satisfying meal if you know what you're ordering. My final call is JEPQ a buy. Alright, this is it. The moment you've all been waiting for. The Kramer call. Is JEPQ a buy? Right here, right now on this beautiful May 19th, 2025. My gut says, it depends. This isn't a simple yes or no, people. JEPQ is a specialized tool for a specific job. If you're an investor focused on income, if you understand how covered calls work, if you're cool with potentially giving up some big upside for more regular cash, then JEPQ might just be your new best friend. It could be a buy for you. What if you're a young buck just starting out, with decades to invest? Maybe you want more aggressive growth. Maybe plain vanilla QQQ is a better core holding for you. But JEPQ could be a nice little satellite, a way to generate some extra spending money. Now, for retirees or those getting close to retirement, JEPQ could play a much bigger role. That monthly income stream can be a lifesaver, helping pay the bills, or funding those well-deserved vacations. Think about your life, your risk tolerance, your income needs. My recommendation? If JEPQ has caught your eye, then roll up your sleeves. Do your homework. Understand exactly what you're buying. Don't just chase that shiny high yield like a moth to a flame. Look under the hood. Understand the option strategy. And please remember diversification. That's the magic word. Don't ever put all your eggs in the JEPQ basket or any single basket. Spread your risk. Build a solid, balanced portfolio. JEPQ can be a valuable slice of that pie, a potentially tasty slice, but not the whole darn pie. So let's wrap this up. JEPQ offers a very tempting income play, hooked to the exciting NASDAQ 100. Its covered call strategy is built for those monthly payouts. But it's a trade-off, remember? You might miss some big rallies, and you're still exposed to tech sector bumps. So, is it a buy for the right investor with the right expectations and the right homework done? Yes, it can be a fantastic addition. But be smart, be careful. And as I always say, nobody ever made a dime panicking. Booyah! Go get 'em!